Welcome to the Lend Academy podcast, session number 39. This is your host, Peter Renton, founder of Lend Academy. Today on the show, I'm delighted to welcome Al Goldstein. Al is the CEO and founder of Avant. Now, Avant may not be a name that everyone recognizes, but I'm sure that everyone will recognize them very soon. They are becoming a force to be reckoned with in this industry. Now, they only wrote their first loan less than 2.5 years ago, but recently they just crossed $1 billion in total loans issued. They are the fastest company to that milestone in our industry's history. So I've been wanting to get Al on the show, talk about Avant, where they fit, who is the borrower that they're targeting, how they're able to scale so quickly, and just we actually dig into some of the details about their underwriting process, about fraud detection, and of course on the investor side, because they recently opened up their marketplace to outside investors, and his thoughts on balance sheet versus marketplace investing. I think it was a fascinating interview. They're a fascinating company, Avant. I hope you enjoy the show. Welcome to the podcast, Al.
Thank you, Peter. Thank you for having me on.
Okay, so let's just get started with giving the listeners a bit of background about yourself and what you did before you started Avant.
Oh, sure. Well, so I started my career as an investment banker probably about 12 years ago, and I did that for all of 12 minutes until I figured out that I was probably a terrible corporate employee and no one should ever hire me.
Right.
But I've been very fortunate to have now been a part of 3 businesses in different industries that have all kind of done very well. And so I actually started my first company when I was 23, which was in the early onset of the online lending space. And the company now is a public company. We started it in late 2003, early 2004, ended up selling it to a public company, and then it's since got spun off, so itself it is a public company now, which is great, and the business has done phenomenally well. And we did that at the end of 2008, so we had some spare time, and my business partner, who now is one of my board members at Avant, and I started a company called Pangea Properties to invest in real estate. And at the time, this was distressed real estate, but really the premise was to bring a sophisticated approach to manage and operate sub-100 unit apartments that are scatter site. And that business has actually done really, really well. So very, very different physical real estate where we had to build operational scale. And then it was Avant. And so we started Avant about 2.5 years ago with 2 co-founders who were actually my former interns at my first company. So it's really come full circle.
So tell me about why, you're doing a real estate thing. Why decide to start Avant? What did you see as the hole in the market that you're trying to fill?
Well, I think like a lot of companies, it came out of a frustration. And what happened was that my 2 co-founders were actually in Y Combinator at the time building a different company. And one of them went into a physical branch to get a loan because they were building a business and clearly didn't have any income coming in. That process was so incredibly excruciating for him. When we were talking about what to do with their business and what to do next, we just saw a huge opportunity in the market to really provide a better alternative, for financial products for middle-class consumers. And at the time, Lending Club had done really well, evangelized the whole category, but we didn't think anybody was really focused on the 40 or 50% of people that are underserved and in the middle class.
Right. So you went right out of the bat with, obviously, Lending Club prospered, go after sort of more of the prime borrowers. That hasn't been your focus. So can you tell us who is the typical borrower at Avant and what are they using the money for when they take out a loan?
Sure. If you look at Avant, our mission is really pretty straightforward. We want to be the best provider of financial service products in the world for people that make between $40,000 and $85,000 a year. We define those people as middle class in the U.S. The incomes shift if you go to other countries, and that's very different than the traditional borrower from a Lending Club, a Prosper, et cetera. Our average borrower makes about $60,000 a year. They have on average about a 650 FICO, and they're highly diverse. But what they're using the money for is really a hybrid of debt consolidation, but it's not always credit card debt. And half the time it's just access to credit because they're not getting access from the traditional banking world. It's for things like home repairs, auto repairs, medical bills, various forms of education, vacations, you name it.
Okay, so then so I imagine these are a little smaller in loan sizes than we're used to at Lending Club and Prosper, which are in sort of the $13,000 to $15,000 range. I mean, what's the typical loan size, and what kind of terms do you offer your borrowers?
Yeah, so our loans are about half the size of the typical Lending Club Prosper loan that you mentioned. On average, about $7,500 to $8,000. Terms range from 2 years to 5 years, on average being around 4 years. And we have rates ranging from 9% to 39%, with the average being in the mid to high 20s. And the main difference for us with our products relative to some of the other competitors, and I think this is quite unique, is that we don't charge any upfront fees to our borrowers. So when you take a loan from us, if you borrow $10,000, you're only paying interest on $10,000. And if you prepay that loan, you only effectively pay interest on the amount of time that you had the loan outstanding, which is a unique benefit for the consumer.
So then, so you just make your money then. Well, the business model for Avant is making money on the spread of the interest rates. I mean, that's your only source of revenue?
No, so we view ourselves as a true online loan platform where we started as a pure direct lending company when we were building up history for our portfolio, making sure that we could underwrite consumers very effectively. But today, roughly half of our loans we make directly and hold on our own balance sheet. The other half we actually sell to investors at a premium. So we don't charge the consumer the fee. We just allow investors to bid the premium up, and that way they can buy that loan at a premium, collect the interest over time, and that's how they get to their effective yield.
Okay. Yeah, that makes sense. So when we chatted last year, you mentioned that, the minimum APR was, I think it was like just under 20%, and now it's just under 10%. So it sounds like you've made a pretty significant adjustment in your interest rates. Why are you doing that?
So our goal is to offer the broadest array of products and terms that we can to our consumer segment. Largely, we couldn't offer rates that were too low because our cost of capital was just too high. And at that time, we didn't have investors that were able to buy loans off of our platform. We now have been able to solve those two problems by having cheaper cost of capital for loans that we hold on our own balance sheet and having investors that are willing to buy loans off of our platform, which now we have roughly $600 million of institutional commitments to buy loans off of our platform. That's going to double over the next couple of months. And so you're going to see us over the next 3, 6, 9, 12 months lower our rate threshold, so we'll be able to offer products that are cheaper to the end consumer, that has the best credit profiles, offer more products that are differentiated, that are not just the unsecured personal loan product, and continue to expand geography.
Okay, so if someone's a 650 FICO and they came to your site a year ago and they come to your site today, are they paying less interest?
So our philosophy is really pretty simple. FICO is one of the credit parameters that we look at, but it tends to make up less than 5% of the value of our predictive models. So on average, that's probably true, but that's largely given the makeup of our customer segment. So the way we think about it is, you come to Avant, we will look at all of the data that we have available today from a credit perspective. We're going to look at over 1,000 individual variables. Based on the outcome of our predictive modeling, we're going to give you the best risk-adjusted rate that we can. And that will likely depend on what your credit profile is. So one 650 FICO will likely get a very different rate than another 650 FICO.
Right. Yeah, fair enough. So, but if your average is 650 and, you obviously got a lot of borrowers up around the 700 mark, I imagine, which is, that's starting to get into the territory where Lending Club and Prosper play. They've got an average FICO just over 700. Do you see those companies as your competitors when it comes to borrower acquisition, or who are you competing against?
I think Avant fits a little bit in the middle, again, because at the core, we are focused on this middle-income consumer. So we do overlap with Lending Club and Prosper and the like a bit as we get above about 680 FICO, which is roughly 25% of our consumer segment today. I think it's going to continue to be more. But I think we're all fighting lack of awareness. Mm-hmm. And at this point, collectively, we're such a small component of the overall market that it's all about just brand awareness and providing better products to consumers rather than individual competition between us and Lending Club.
Right. Yep. Fair enough. So then how are you acquiring borrowers today? Do you have a mix of, direct mail, online? And what are your major channels?
For Avant, the acquisition channels are just highly diversified. We do online and offline partnerships. We're going to focus a lot more on partnerships over the next 12 months, and you're going to see us announce some exciting partnerships shortly. That's going to be both with banks and non-banks. Uh-huh. We are very strong with digital marketing, social media. We have lots of referrals coming to us from existing customers that have had a good experience. Direct mail makes up between 10 and 15% of our total volume. We think it's a great channel, but we really believe in expanding our channels. You're going to see us do more offline media like radio and television and really build our brand, which is really the long-term goal.
Okay. Then, so what about mobile? I mean, what are you doing? Is that a major part? I mean, what percentage of your borrowers come to you over the phone or over a smartphone? And how important is that to your business today?
I think mobile is the future, and it's all about leading with mobile and creating a better customer experience. 60% of our borrowers actually come to us via mobile phone or mobile application today.
That was 60, you said? 60%?
Correct, 60.
Wow.
So it's the majority of our customers. And we just rolled out our first mobile app in the Apple iStore recently, and it's actually geared towards existing customers, but you're going to see us evolve that to really be an app that allows brand new customers to do their full application and manage their entire process online, and roll out an app on the Android store as well. And so we grasp mobile as the future. In the U.S., that's clearly the case, but as we go to more international markets, and especially some of the developing markets over time, it's all about mobile.
So if you're focusing on existing customers, what does your app do today that would interest your existing customers? Is it purely just trying to get them to repeat, to buy, to take another loan out, or what does it do?
So today, the application allows people to manage their account through the verification process. They'll know exactly what parts of the verification process they've completed or may need to complete. And they can manage their account and their payments online, so they can move their payments around, schedule prepayments if that's what they want to do, request a refinance, really putting the power in the consumer's hands. Mm-hmm. And going forward, it's going to be the full application flow, full application process, and more tools and features. Okay.
So I want to switch gears a little bit and talk about your underwriting process. You mentioned on your panel at Lendit that you said 50% of borrowers today are going through a completely automated process when it comes to underwriting, and you said you want to get that up to 90%. I think you said. Can you tell us how you're able to do that, and what kind of processes you're using?
Sure. So at Avant, we really differentiate between two processes side by side, where we have a credit process, where we come up with an automated credit decision for all of our consumers that is defined and not something that any human can change. And then a fraud and identity process, which tries to make sure, to the best of our ability, that you're not the subject of identity theft. You, in fact, are the person that's applying for this loan. And the way those processes work, on the credit side, we're trying to get as much data as possible to come up with the best answer for the likelihood of longer-term performance. And therefore, that translates to your dollar amount, your rate that you're going to be charged, your payment stream, etc. On the fraud and identity side, we're using as many tools and pieces of data that we can find, in conjunction with very sophisticated fraud processes that use machine learning algorithms to try to ferret out the people that have a higher likelihood of being fraud or not being who they say they are. And those are the people that we're looking to manually verify. So as we continue to improve our processes on the fraud and ID side, those are the people that will be able to automatically shuffle through the process. And our view is that's what the customer really wants. What the customer wants is an instant answer, because we live in the world of instant gratification via the mobile phone. If I can give you a real-time answer, you're going to enjoy that experience so much more.
Okay, so just help me work through this. I mean, someone comes along and just say they're an upstanding citizen. There's no red flags, and they're part of the automated process. They get an instant answer, and when do they get their money?
Typically next business day.
Okay, so they basically you get the answer. They agree to say yes, I want this loan, and then you're just doing an ACH with them the next day.
Correct. The customer will have to agree to receive the funds via electronic deposit, and upon that agreement, assuming that we are before the cutoffs for that day, the funds will just arrive on the next business day.
Right. Okay. So then I'm guessing. So you've said right now you've got 50% of the borrowers are being flagged in some way, and a human being will actually look at them. How long is that going to take for the typical the human intervention to get? How long will the approval process take?
For us, virtually all applications are processed within 24 hours, and the vast majority of applications are processed within 30 minutes. 50% of applications, as we talked about, are processed in absolute real time. What our goal is to get to the point where 90% of applications, as I said at Lendit, are approved or declined in real time, and only 10% of the applications have a manual processing component. And the only reason that processing component can take longer is because we're waiting for borrowers to do something on their side.
Right.
We're going to get to those applications very quickly, but we may be looking for a borrower to submit some more information that they didn't submit, connect their bank account, etc.
Okay. So then obviously fraud is really high up on your agenda if you're doing automated underwriting. What have your experiences been of fraud? I mean, I know that it's a huge focus at the other major platforms as well. I mean, how much fraud is there on your platform today?
So we have a lot of attempted fraud, as you might imagine,
right.
Given the fact that we're in the business of handing out money
right.
To potential borrowers. But we've actually had a lot of success in stopping virtually all fraud, where in the first $1.1 billion, $1.2 billion of loans that we've written, we've had roughly $200,000 of total fraud that we funded. Mm-hmm. That's confirmed, which is a tiny percentage. And we're very proud of that percentage. And largely that's due to the sophistication of our fraud processes. And we continue to invest in those processes.
Right. No, that's quite impressive. So then what about defaults? I mean, you're operating in an area of the market where, people's jobs typically aren't as secure. They might take a lot longer to get another job. How have defaults gone for you? Can you give us some sort of idea on the numbers of an overall annual loss rate?
Sure. So the way we think about defaults at Avant, it's all about really risk-adjusted return or risk-adjusted yield, where our average gross rate to the consumer may be in the mid to high 20s. And on average, we have roughly 10% annual delinquency. So whatever your gross rate is, if you take out 10%, that's roughly the net yield from those loans. Mm-hmm. And that's actually been quite consistent. The other view is that for people that have less variability, that are higher credit quality consumers, they get a lower rate. You'd expect there to be very little delinquency. For people that have a higher yield, that are more variable, have higher potential delinquency. So it's all about really allocating the right risk to the right customer.
Right. Yep. Fair enough. So let's talk about your investment partners now. You launched your marketplace, just before Lendit. You had some marquee launch partners, KKR, Victory Park, Jefferies. So can you just tell us a little bit about how the marketplace is working? You mentioned you got $600 million in demand. I mean, are these entities investing just across your platform? Are they sort of giving you a credit profile of the kind of borrower they want, and you just find loans to fit them? How's it working?
Sure. So the Avant marketplace is set up to be randomized. And so the idea is that neither Avant on our own balance sheet nor any other investor can front run or cherry pick select loans in a given tier. So if you want to buy our A loans, our B loans, our C loans, they will look just like the C loans that we hold on our own book and the loans that anyone else who's buying at that tier will get to buy, which we think is extremely important from a longer term conflict of interest and transparency perspective. Mm-hmm. As you mentioned, we launched with 3 great launch partners, We actually are in the process of doubling that $600 million of capacity over the next couple of months. We're launching with Orchard to allow investors on the Orchard platform to buy Avant loans, which is going to create a lot of diversification in our institutional buyers. And at some point, we really are excited about creating vehicles for high net worth individuals to be able to buy our paper. So the goal is to really diversify the channels through which investors can buy Avant loans and hopefully translate to better returns for investors and cheaper rates for consumers.
Right. Okay. Interesting. So does that mean then right now, are you de-emphasizing your balance sheet? Is this, what percentage of the loans now are going to marketplace versus balance sheet?
It's about 50-50. That's the ratio we really like. We are very comfortable holding loans on our own balance sheet, but we also like the idea of allowing investors to invest in the Avant loan portfolio and Avant loan platform.
So is that a percentage you want to maintain as you grow?
I think it's largely going to be a function of how much capital we have available on our own balance sheet, but something in the 50-50, maybe 60-40 toward the marketplace is a good level that we think mitigates any sort of conflict of interest from originating loans that may not be the right loans to originate, but also allowing Avant to scale without needing a huge amount of additional equity capital.
Okay, great. So I want to talk about the rebrand that you recently did. You went from Avant Credit to just Avant, which, it's not a huge change, but you've got a five character domain now. What was the reason for the rebranding? Is there something about credit that you wanted to de-emphasize?
No, I wouldn't say it's that. We just think Avant is a much stronger, much cleaner brand that resonates better with our consumers as we look to invest in the brand. And at the end of the day, we want to be the best provider of credit and credit products to consumers. We just think that the Avant name is just a better way to do that long term.
And so tell us a bit about that name. How did you come up with it?
Well, I'm sure you're aware of the French meaning of avant-garde. We just like the idea that we're trying to innovate and really provide better credit solutions for consumers and do that on a global scale. And so it fit really nicely with what our vision and our mission really is.
Okay. And one of the things that I was curious about, you launched in January 2013, but then in your first 12 months of operation, you expanded into the UK, which seemed to be, it's pretty early for a startup to be going and focus and moving internationally so soon. Why did you do that? And is Avant, you want it to be a part of you want it to be a global brand? Is that part of what you're doing?
Yeah, I would say our vision is to create a global business, and that's been our vision from really day one. And the way we think about new markets and new products is it takes us a long time to get comfortable with the market dynamics, product market fit, credit, and the earlier we can launch a product and start to gather data and information, the sooner we're going to be able to get to a point where we can scale. And so that's one of the reasons we launched in the UK just 9 or 10 months after we launched in the US. It's still a relatively small component of our business, but the UK operation is doing really, really well. We are looking to set up our Avant marketplace in the UK for loans originated there imminently. And we're going to continue to do that. We're going to continue to invest in new markets, and we're going to continue to invest in new products early, with the idea being that it's all about longer-term innovation.
Right. So are you in the UK, are you focused on the similar kind of market, sort of these middle-class borrowers? Is that still the focus?
Exactly.
Okay. And then, because obviously, you've got a different credit infrastructure in the UK. There's no social security number that's that helps create a rich credit history. So I imagine when it comes to underwriting, you can't use your same model that you have in the US into the UK. You have to start, almost from scratch, wouldn't you say?
No, that's 100% the case, and I think that's true for any new market that you wade into, that you go into, and that's one of the reasons we just believe that you have to be willing to invest in these markets early to try to make sure that you don't stop innovating.
Right.
And whatever new market we go into, we're going to have the same challenge.
So does that mean you're going to see Avant Australia or Avant China sometime soon?
I would say that Avant Australia is probably a lot sooner for us than Avant China.
Right.
But we love international, quite honestly.
Okay, cool. So then let's just talk about some of your numbers. We're recording this in early June. I mean, what was your volume in May?
We funded nearly $160 million worth of loans in May, which was a massive record for us. It gets us to nearly a $2 billion annual run rate. Mm-hmm. And we funded just under $400 million of loans in all of 2014. So that just speaks to the scale at which we're currently operating.
Right. Okay. So, and what about profitability? Is that? I mean, it seems like you've got an A-list group of backers providing equity funding for operations. Is profitability on the horizon?
Well, so we've been cash flow positive since late 2014, which we're very excited about. Mm-hmm. The challenge for profitability in the short term for us is that with GAAP accounting, we have to provision for future losses for loans that we hold on our own book.
Right.
But we expect to turn profitable on a GAAP basis shortly.
Really?
And be profitable all of next year. So we're actually very excited about that. And like I said, operationally, from a cash flow perspective, we've been positive for a while now.
Right. Okay. So then you are. What's your prediction for how much is Avant going to do, globally this year in loan originations?
Yeah, I think we're going to do close to $2 billion, if not more, in 2015, which is massive growth relative to where we were in 2014. And our view is as we launch new products and new markets and new initiatives, we should be able to continue to scale on multiple fronts.
So let's talk about that for a second. Are you what kind of new products are you looking at right now? You're doing an unsecured consumer loan. Is there something else on the horizon?
Sure. The way we think about the market is really we want to continue to meet more of the same demand from the same consumers that we're currently serving. And we think those consumers really need an unsecured personal loan product. They also need a secured personal loan product. So that's where we're looking at to invest. They also need revolving products where they can use a card-based product to go and transact at the point of sale. And so those are really the two key areas where we're looking to invest and add value.
So does that mean we're going to see an Avant Visa card sometime soon?
I don't know how soon that's going to be, but we're definitely looking at it very actively.
Okay. And then when you say secured, are you talking real estate? Are you talking auto? Both?
I mean, we're really looking broadly, but I would say auto is a more attractive space for Avant in the short term than real estate, just given the various complexities of the businesses and our ability to roll something out to consumers quickly.
Right, but so is it fair to say then you want to sort of create products for your core market, the middle class kind of consumer that is suitable for them? So you're not going to do what SoFi is doing, $1 million real estate loans is not on your horizon.
Correct. At the end of the day, we are true to our mission, which is really being the best provider of credit products and credit services for middle class consumers around the world.
Right. Okay. So as you look to the future, you've got multiple loan products. I mean, you've got rapid growth. When's the Avant IPO?
The $1 million question. I would say the equity markets are clearly robust and attractive. I would say over the next 2 or 3 years, an IPO is something that's pretty attractive for Avant. Right now, we're very focused on just making sure that we execute on the various initiatives in front of us, which is very challenging. We're growing very, very rapidly. We're a 2.5-year-old company that now has 700 employees.
Wow. And
we're going to continue to scale on that front. So we're just trying to make sure we hire great people, great engineers, focus on making the products better, more transparent, more mobile friendly. But at some point, being a public company is really the goal.
Right. Okay. So it sounds like, obviously the equity markets now, I mean, sooner rather than later would be probably a good move. But I guess this is not something that's in your near term horizon then.
We just think of the fact that we're a pretty young company. Some of the other companies in the space out there have been around for a lot longer than Avant has been around. We have a lot of strategic initiatives that we're working on that you and I have just talked about, and international and product growth. So we just want to keep our head down and keep executing and really building a better product for our customer segment.
Right. Okay. Well, on that note, I'll let you go. I really appreciate your time today, Al. It was very interesting.
Great. Thank you, Peter.
Okay. Thank you. I think what Al and his team at Avant have done over the last 2.5 years has been nothing short of extraordinary. You know, they wrote their first loan in January of 2013, and here we are now. They've crossed $1 billion in total loans issued, and they've done this with a focus on a singular market. They're not trying to go after the same borrowers that Lending Club and Prosper are trying to go after. They have their own niche, and I think the playbook that Avant have executed flawlessly so far is something that many other platforms I expect will imitate. And that is, you know, you start off as a balance sheet lender, you build up a track record, you build up some history, and then you open up your marketplace and get a lot of investor interest, as is clearly what's happening here with Avant. It's a fascinating story, and I'll be watching with great interest as they continue to grow over the next 12 to 18 months. I think they are really going to establish themselves as one of the true leaders in this industry. On that note, I will sign off. I very much appreciate you listening. Hope you enjoyed the show, and we'll catch you next time. Bye.